So if there's any trade in the world that traders are convinced is a one-way trade that can never reverse, it's the long dollar, short the euro and the yen. And I'm going to tell you that everybody is going to be caught on the wrong side of this market. Um, I've noted before the dollar is going to be due for a 3-year cycle low sometime this year. This kind of sentiment, this kind of mentality that a trade can only go in one direction is exactly what is required to produce one of these multi-year cycle lows. So we saw it last year in the stock market. The market had gone up for so long, there had been so many interventions to keep it propped up that everybody was convinced that the stock market could never fall, and then it did fall into that 7-year cycle low, caught everybody off guard. The dollar's going to do the same thing. So, uh, we had actually, I think the move into the 7-year cycle low started right here. The dollar was never going to break out above this double top. It had already rolled over and started down into the election, but we got that massive intervention in the stock futures to prevent the market from gapping, from opening limit down. That would have trapped the banks into multi billion-dollar losses. So that had to be stopped at all costs. We got the we got the big intervention in the futures market. Stocks were turned back up, and that gave the dollar a shot of adrenaline and extended this intermediate cycle, which if it had been allowed to trade naturally, was never going to go above these two peaks. But we did get above it. Um, we've I'm pretty sure we've topped. Pretty sure we're starting to move down into the 7-year cycle low. The dollar will have to break this intermediate trend line at some point. I think it's going to break it and go well below it sometime between now and this summer. Probably we're going to break this low here at the 7-year cycle low, although I don't know that it's going to be a significant move below it. It may be similar to the Euro chart, which I'll show here in a minute, where we just get a marginal break below it and then reverse. But here is the dividing line. This was the breakout above this double top. This is what convinced everybody that the dollar was going to 120. When this breakout gets negated, we're going to have just a massive amount of bulls, traders that are all on the wrong side of the market. They're going to get the warning that hey, they're on the wrong side, and that's going to trigger um, a lot of selling over the next let's call it 4 or 5 months into that three-year cycle low. So I don't know that this is going to break today. This is a pretty big support level. The bulls will probably try and defend this. We might even get a bounce for several days, but I'm going to tell you this is not going to hold. It is going to break at some point here, if not this week, probably next week, and then the floodgates are going to open, and the dollar is going to go down. It's going to break this intermediate trend line, and it's going to continue much lower into a 3-year cycle low later this spring, April or May. And so here's what I'm looking at in the euro. You can see what I was talking about. We get a marginal break below this double bottom, and then that's where the multi-year cycle bottoms, and we start back up. So I suspect we'll have something similar with the dollar. We'll probably go down and break that low from I believe it was last May, but it won't be a sustained move below it. Probably not anyway. It'll probably be something like this, an undercut, and then we go back up. But we've got what I'm pretty sure is a multi-year cycle bottom in the euro here. We're starting a new intermediate advance out of a yearly cycle low. The first daily cycle out of a yearly cycle low is usually fairly powerful. They'll typically rally anywhere from 20 to 25 days. And as of today, the euro is only on day 9. day 9 of a first daily cycle coming out of a yearly cycle low. So we probably got at least 10, maybe even 15 days yet before this daily cycle tops. And I'm going to say that it's probably at least going to reach this 38% retracement before the daily cycle tops, and we get a small short-term correction of maybe 4 or 5 days, and then another leg up. But if I'm correct on the dollar, and I'm pretty sure I am, then the euro is probably going to retest this level up here and maybe even marginally break it before this intermediate cycle tops. And so same thing with the yen. We still got plenty of room here to before it hits the next resistance zone at the 38% Fibonacci retracement. And again, I think the yen is also only on day 9, so we should still have 10, maybe 15 days before this daily cycle tops and we get a short-term correction. And I don't think the dollar. I don't think there's any chance of the dollar holding this breakout. I think it's going to go through that, negate that breakout, and that should open the floodgates and catch everyone that's on the long side of the dollar, on trusting that is a one-way trade. The dollar can only go up. That will catch them on the wrong side of the market. That's the fuel for the dollar to move down into that 3-year cycle low. And I'm going to tell you that as long as the dollar is continuing down into that 3-year cycle low, gold is going to be moving up. Won't be in a straight line, but I'm going to be exactly right on gold also. In bull markets, all timing mistakes get corrected. I know this was a painful period. I didn't anticipate that intervention that gave the dollar a shot of adrenaline. Nobody did. Nobody anticipated that intervention in the stock market and the effect it would have on the currency markets and gold, but it is not going to change the long-term direction. It was just a temporary roadblock, but it's not going to change that. The dollar is still going to have a trip down into its 3-year cycle low, and that is going to power the next leg up in the gold market.